Western politicians and business leaders have made no secret of their reliance on emerging markets for growth. And the countries that top their list every time are China and India. But these two powerhouses also lands of equal opportunity. Well, India and China have a lot in common. Both have a population of over 1 billion and boast fast-growing economies worth over $1 trillion each. But there are striking differences as well. China's economy is almost 4 times larger than India's, while average income is more than 3 times higher. In addition, it is seen as an easier place to do business. The World Bank ranks it at 79 in this regard. India is way down the list at 134. Well, India, on the other hand, though, lists its democratic credentials and young English-speaking workforce among its key advantages. So, what of these two, or which of these two, holds the key to the world's economic future? Joining me is Victor Chu, chairman of First Eastern Investment, and Anand Mahindra, the chairman of Tech Mahindra. Thank you so much to you both for joining us here in this beautiful studio in the snow. Anand, I wanted to start off with you because there is actually a lot of concern that, sure, the growth is coming from the emerging markets, but there's so much cheap money slushing around that it's going to create asset bubbles. And in India, we have a huge inflation problem.
Yeah, well, one of the strengths of the Indian economy has been our managers of the macroeconomy, specifically our finance ministry and the Reserve Bank of India. They're extremely cautious people. The word bubble sets them off, sets alarm bells ringing off in their heads. And as you may have heard, just 2 days ago, the Reserve Bank raised the interest rates there by about 25 basis points, signaling basically that they are going to keep a very, very alert watch on core long-term inflation. They are not going to allow this beast to come out of the box, as it were. But at the same time, they're not having a knee-jerk reaction, killing short-term growth, which is very, very strong. So I'm confident we're in good hands and that we have a very good watch over bubbles that may or may not emerge.
And Victor, we've also seen actually a lot of politicians and policymakers in China trying to curb the growth so that it doesn't come out of control and therefore risk, bottoming out.
Right. I mean, China's GDP growth exceeded 10% last year, and the first, month of this year again is very high, 9%, higher than the policymakers would like to have. So we are very similar in situation as India. The brakes are being put on, but gradually, and reserve requirements on loans have been increased 7 times last year. So I think we are sensitive and watchful of developments.
It's a bit tiresome because every year we say, well, actually, this year, guys, markets, and that's what's going to focus in Davos. But are you getting wooed, Anand, much more now? Or do Western business leaders want to speak to you and try to make deals because your superpowers are becoming that much more important?
Yes, I think clearly from the time that I've been coming here, which is probably since 2003, there's been, if you look at it in that time horizon, certainly the level of wooing has gone up dramatically, and that's wonderful. I think it's about time that India was wooed and made itself worthy of being wooed. So that's wonderful. If you ask me on a shorter time horizon, it's a good thing, I think, that there's a revival of confidence in the West, which I'm beginning to sense. Now, it's early days here at Davos, but I'm seeing much more confidence. The bars are buzzing. The people are talking a little more confident. Fewer long faces at the bars these days from the Western businessmen. The economy seems to be an upswing. President Obama's ratings are up. He must be doing something right. And there are pockets of Europe, like Germany, which are showing surprising confidence. So that doesn't mean they're not wooing India or China. I just think that there is a little bit more of a balance than there was last year, when it was all doom and gloom for the West. And, oh, my God, we've got to catch these emerging markets and hold on to their coattails, otherwise we'll be left behind. Balanced views, balanced growth expected, which, frankly, I think is excellent for India and China. China particularly, it's an export powerhouse, and India is beginning to become a major exporter. So balanced growth is good for all of us.
Victor, do you also share this optimism? Are we seeing really less long faces at the bar?
Oh, I think this year the mood is much better than last year. But I think the recovery is still gradual. We would like to see a few more quarters in order to cement the recovery. Now, obviously, quantity easing is a temporary tour. It plants seeds for future trouble if we don't kickstart the economy again on a worldwide basis. But it's not as developed economies wooing developing economies. We are also wooing each other.
Yeah.
China and India and the Gulf. There's a lot more consensus that we are interconnected, we're interdependent, we need to collaborate, and through partnership we'll win together.
But certainly a lot of the Europeans, Victor, are here hoping that we'll get something in Davos in terms of maybe more support or more bond buying from the Chinese. Is that likely?
Well, it will happen because the overriding priority for the Chinese is diversification. Right now, Chinese has almost $3 trillion in US dollar reserves, and therefore diversifying into other, sovereign deposits and sovereign paper will make sense. But obviously, one has to make sure that you're investing in the right instruments.
Anand, we only have 20 seconds left. Are you going to sign deals here?
It's too expensive a place to come to not to sign deals. I just did one MOU, which we will release to the media soon. So, yes, we are signing deals.
All right. Anand, Victor, thank you so much. And Andrew, of course, I'll try and get that deal out of Anand Mahindra, but I don't know if he'll tell me anything.